The Canada Revenue Agency will begin accepting income tax returns on Monday, marking the official start of tax filing season. The agency cautions, though, that it will be another unique tax period as it continues to face challenges due to the COVID-19 pandemic. The federal tax collector says Canadians need to file their income tax returns so they can receive benefits and credits that they may be entitled to. Meanwhile, investors should prepare for the RRSP deadline next week on Tuesday, March 1st. Joining us now to tell us more on the benefits of investing now and into the future is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Very good to be here. Great. Thank you for having me.
Lots happening in the world today, and in turn, lots happening in the markets today as well, Brendan. So for people that have been investing, how do you deal with market volatility, especially like now with the Russian invasion of Ukraine?
Well, it is a funny thing, Nima, that political events seem to have very temporary effects on the market. We saw that in 9/11, where the market at the end of 2001 closed higher than it did the day before 9/11. And now we've seen the U.S. markets were quite negative, but 2 or 3% down. And now some of the major U.S. indices are actually positive at this point. So it's a very strange thing. So we get caught up in political issues, and this is beyond political. This is a full-on war. But the markets seem to take this more in stride than one would otherwise think.
All right, Brendan. Well, let's get into the RRSP. We mentioned the deadline to contribute is Tuesday, March 1st. But as investors scramble to make these last-minute contributions, what does a monthly contribution do to benefit investors in this time during tax season?
Well, the benefit of doing it monthly is that whether something terrible like is happening in Ukraine and Russia is happening or not, if you're adding it to it every month, you're buying more when it's lower and less when it's higher. But if you are, to use your word, scrambling to make a contribution now, it doesn't actually mean you have to do anything with it. If you're uncertain about the market and you're making a larger contribution, you putting money into an RSP and investing that RSP are two separate actions, two separate decisions. So if you're putting in, let's say, a big amount for most people, let's say $10,000 or $20,000, and you don't want to invest all that right away, you don't have to. Invest $2,000 or $5,000 of it, and then next month see how this all sorts it out and do a little bit more. But you should make the contribution in order to get the deduction against 2021's taxes, and then what you do about investing is a separate decision.
All right, Brendan. Well, talking about investment in general, we know you believe investment success is about ideas. So what would you say to someone who thinks maybe all the ideas are available online?
Well, I think that the trick with online anything, whether it's investing ideas or political ideas or ideas about the vaccine or any ideas, is that increasingly social media and online tends to be an echo chamber. What I think one wants, but talking about investing particularly, is a degree of objectivity, someone who is able to interpret an idea, to bounce an idea off of, to have someone with whom you can actually discuss an idea in a meaningful way that may not exactly echo or share your point of view. So the trouble with online is, on one hand, there's too many ideas. On the other hand, those too many ideas increasingly are focused in one particular direction, reinforcing or giving confirmation bias to what you're already thinking.
All right, Brendan, well, taking all of that into consideration, what would be your advice to a brand new investor looking into entering into this space?
Start today. Start with something. Yes, this or that or the other is happening. There's always something, large or small, to prevent you from doing it. But you don't have to do with everything you have. Start with $100, $1,000, whatever is just slightly a meaningful amount to you, and then add to that $100 or $1,000 next month and the month after. If you're particularly younger, you have something better than money. You have time. And if given the choice between time and money, particularly toward the end, most people would prefer time. So if you have time to accumulate, then do it by using this dollar cost averaging of adding a little bit every month.
All right, Brendan, just about a minute left here. But in terms of where to invest our money, what would be your advice in terms of where to invest if you're not sure?
I think for most people, particularly at this time of very low and possibly rising interest rates, invest in something that can grow. Whether it is the US market, whether it's the Canadian market, something that has the potential to actually grow with the economy. Because what we've seen over the last number of years is asset inflation, whether it's houses or French wine or all the other asset classes. but the stock market in particular has continued to grow. So if you're adding to it on a monthly or regular basis, you will grow with the economy and you won't be inflated out of having personal growth or personal growth in your wealth.
All right, Brendan Caldwell from Caldwell Securities Limited. Always great having you on Forum Daily. Thank you again.
Nima, thank you.
Thank you. All right, take care. We will see you soon after the break.